Let me guess, you from the town that I love best. Talk Memphis, I wish you would. Talk Memphis, you sound so good.
Miss Wendy, how are you?
I'm well. How are you doing?
I'm good. Wendy Greenlaw with Chandler Reports. Guys, you've heard her before. She's come on the show. She gives us all kinds of extremely valuable knowledge for our market, trends, what's happening. It's really kind of the pulse of our market here. If you want to go to their website, chandlerreports.com, you can find out a little bit more about them. Wendy, welcome.
Thank you.
So tell me, we talked a little bit before we started here, and you've got some different and exciting info. Tell me what happened in quarter two with our investor market and the residential.
Yeah, let's just start with the overall market. So we're through the first half of the year now, which is crazy. It's going by so quickly. Memphis, Shelby County home sales through the first half of the year up 2% for total number of units, which kind of surprised me a little because the inventory is so low.
Everybody's grabbing
They're just going so quickly, I guess, because we have seen a slight bump in inventory. I think we're up 300 home sales according to MAR last month, but they're just going like the second they hit the market.
That's great.
Average sale prices through the first half of the year up 9% from last year. So remember last year we hit that highest average sale price. So we're up 9% from that point last year. Yeah.
So we're setting records every quarter.
Yeah. So Q2, we set a new highest average sale price, just over $185,000. Which is crazy, up 9% from the second quarter last year.
What do you think that is?
I'm going to go through that in just 1 second.
Right.
And the number of units sold, which surprised me as well, was up 5% in Q2. So, again, supply. So let's talk about pricing. Supply and demand, we've gone over this a lot. So the low inventory is affecting prices. It's driving them upward. And I've gone over this with you before. Because we have so many investor-owned parcels here in Shelby County, over 30%, we're a hot investor market.
Yep.
I feel that those aren't going back to the retail market. And I think, was it Channel 5 just covered a story about that and was talking to realtors, and that's another concern they have. They're just not seeing them return. And I don't know if you think they're going to come back to the market at some point, if it crashes or...
The hedge funds are going to...
They're going to.
They're going to sell at some point.
Okay.
I think.
They're just not selling yet.
And it might be a while. I mean, it could be years upon years before they decide to sell. I think your smaller mom and pop buy and hold people are going to keep them.
Right.
For the most part.
Right. So that's one reason. Lack of foreclosures and bank sales. So those sales and transactions typically bring down our prices. During the housing crisis, it tanked our sales prices. So those are pretty much non-existent. They were down 35% foreclosures in Q2 compared to last year. It's pretty bad, yeah.
I mean, that's pretty bad.
It's not pretty bad, but it's like there's none. It's bizarre for Memphis.
Do you think that people are just paying their mortgage, or do you think that mortgage companies are not letting go of the bad paper?
No, I think that we're seeing more mortgage companies trying to take back those properties that they wouldn't have maybe when the market crashed. And I just pulled a report yesterday for Q2. The average years owned was 16 years on the property. So we're still talking about those loans that were, subprime and all that.
So there's still some of that's here. You think that's going to ramp up?
I don't know. I've asked Eric Barnes with the Daily News about it, and we're just stumped. I don't know. But I did read a report this morning. I think that across the United States, there was like 960 million, I don't know, some high millions of dollars of credit card loan lending activity going on. So I don't know if people are borrowing on credit instead of purchasing home. I don't know. But that kind of concerned me.
Extremely. Because that credit card debt will lead to
like bankruptcy,
foreclosure.
Yeah. So that's something we need to keep an eye on, I think.
And I've also noticed that interest rates for residential retail sales are dipping.
Oh, they're going down.
Yeah, interest rates for a buyer.
Okay.
Now, I'm sorry. I'm talking credit scores.
The
credit score
they're
qualifications are dipping a little bit. I'm sorry.
Yes.
Credit score for a buyer, the qualifications to get a loan are dipping.
So they're being more lenient on that end.
So we're going to start seeing some more of those, loans that are not as qualified or as strong as some of the others come out.
Right. So something to keep an eye on.
Okay.
New home sale prices continue to climb, up 11% in the second quarter to $375,000. And I went back and I looked at the second quarter of 2006 when we had that new housing boom. I think you started in that time, right?
2002 is when I started.
All right,
yep.
So you went through that whole boom. So in the second quarter of 2006, I've been saying that I think it's larger homes that are selling. I'm not sure that's the case. So the homes that are selling in the second quarter of this year compared to 2006, they're only 14% larger, which isn't that much. I mean...
No. So you're talking another 400 square feet.
But the price
probably.
per square foot is up 22% from that time. And I think it's because construction costs have gone up. I think you are seeing probably more customized homes being built.
Yep.
But I don't think it's that they're that much larger in size.
So I have a friend who has just priced out to do a custom built home.
Okay.
And this would be their third. They love doing
Right.
it. I don't see how.
Their pet projects.
But they love it. And their cost from just 2.5 years ago to build the same square feet is up almost 20%.
Right. So that matches our figure.
Mm-hmm.
Yeah.
So, I mean, like literally they priced out a whole home. And they looked down at it and they were like, oh my gosh, this is like 21.5% higher than what we did just 2.5 years ago.
Right. Because the materials, the people, so many people got out of the trade when they
got out of it. Now that we need them all back again.
They're not coming back because they're scared.
Highest bidder.
Right.
Mm-hmm.
Yeah. So, and then the other thing is inventory on new homes. So there were only 961 properties in inventory at the end of Q1.
Mm-hmm.
That's 4.5 months supply based on the sales. So in Q2 of 2006, there were over 1,000 new home sales. Second quarter this year, there were just over 200. Just to put things in a little bit of perspective for you. And then we were talking before the show started, high-end home sales are way up. So home sales over 300,000 were up 30% in the second quarter.
And we talked about this. I think it's likely one of two things. Fewer lots, so builders are building bigger houses to make more money, that less opportunity. Two, people are now selling their homes and making the money that
they maybe couldn't have made
they couldn't
a few
have
years
made
ago.
4 years ago, 5 years ago. They're now selling, making more money than what they thought or ever could.
Right.
Rolling that into something bigger and larger.
Right.
Has to be.
So I think all those things combined, obviously, are continuing to drive the prices up. When will we hit the ceiling? I have no idea. I just think it's going to continue through the rest of this year at least.
Mm-hmm. Okay.
So going over to investor sales, the second quarter was a little slow this year, and we talked about this as well. I asked you if summer was a little bit slower, and you mentioned that it was because of vacation season. Mm-hmm. But only around 30% of the sales in Q2 were investor purchases. We're usually at around the 40%, 45% mark.
Yep. Mm-hmm.
And it's dropped off a little bit. And of those 30%, only about 45% were out of town buyers, which you and Dan think is kind of low.
Right. Well, I think I would say out of my clients, 90-something% of them are out of state, to be honest.
Right, but a lot of the activity in Q2 was local people buying up properties. And we mentioned the hedge fund. There was virtually zero hedge fund activity. Cerberus had 4 purchases.
Hedge funds go through money raise, capital raise.
Okay.
So they might be doing a capital raise right now, and it could be something that's seasonal where they stop right around now, raise, and then finish strong in the year. You never know. Yeah. I don't think they're going anywhere.
That makes sense. It was just odd that there were 0 from some of the larger players, and Cerberus just had 4.
That has to be a capital raise. Now, I don't know, though. I mean, it could be, hey, like Memphis is tapped out of that $150,000.
Well, that's what concerns me. Is this a sign of something, coming forward? We'll have to keep an eye on it going the next few months. But
I'll be interested to see after Q3 if you have similar dipping numbers.
Okay. So some of the top zip codes for investor purchases are the main players we always see. We got Fraser 38127, 76% of their sales were investor purchases, which is standard. Yep. Followed by Raleigh, and then University Area 38111, Westwood 38109, and your favorite 38118, Oak Haven Parkway Village. Pricing on investor purchases was like an all-time high. So it capped out at 81,871. Roughly 82,000, which was up 6% from the first quarter. Mm-hmm. And then the property's average tax appraisal value was about 82,000. So we're seeing that gap is closed. It used to be about $10,000, $15,000 difference between the price and the appraisal value, and it's closed. And obviously it's because pricing, and I'm sure inventory.
It's going up.
Yeah.
Less homes, prices are going up, more demand.
Right.
People willing to pay more than what they probably should.
And then the top 3 buyers, all local, Mid-South home buyers, REI Nation, and Memphis Investment Rental Properties.
The information that you give us every quarter is awesome. I can't tell you how much I appreciate you coming in and giving us this. I'm shocked to hear some of this not shocked. It's different.
It is different than what it has been the last few times.
Than what we've been talking about the last couple of quarters that you've been coming in. But we knew in every situation, if something is sky high and red hot, it's going to level off. I don't think we're going to dip and fall down into a tunnel here, but could we level off and flatten out for a couple of quarters even? I think so. Yeah. We might be hitting that now. And I mentioned, the investors, some of my investors are concerned about multifamily, larger
type properties
With
having
the occupancy,
the
and that could be
occupancy.
the case. I mean, that part. See, we don't have a hard time at CrestCore renting. We're not. Our vacancy properties are the lowest they've ever been.
Right.
So we're able to get tenants in there, but on a huge, large scale multifamily, that might be looking at that something different.
But on the apartment side, wouldn't you rather rent like a single family property than be in an apartment? And like
I personally would.
I think a lot of people would. So
some investors look at it
are
different
single family
ways.
properties taking away from the multifamily? Do you
Could be.
feel?
Yes. That's because if you can rent one versus the other, why would you not have the same?
Right. Exactly.
That could be it. Yeah.
So I think that might be a trend that we need to keep an eye on as well on the multifamily side.